The Reserve Bank of New Zealand will announce their interest rate decision in the new trading day. That comes after a NZDUSD our business survey, which came in weaker than expected and has the market thinking, well, maybe there's a 50-50 chance of a 50 basis point cut instead of a 25 basis point cut. That is to be determined, but it will also influence the price action in this the New Zealand versus US dollar in the new trading day. I'll talk to the technicals that would shift the bias from a more bearish view right now to a more bullish view, and also talk about the targets that might be in play through that interest rate decision. So let's get started. Looking at the 4-hour chart of this currency pair, what sticks out to me and gives me more of a bearish bias is that the price is below this swing area. The swing area was defined by a number of different highs and lows through here. Now we fell below that level and used that level as resistance 2 weeks ago. Last week we used it as resistance, and this week we used it as resistance again, climbing up to the high of that swing area at 0.5844 before rotating back to the downside on that news business survey news report this week. That move higher also stayed below some key moving averages. More specifically, we have this blue line, which represents the 100 bar moving average on the 4-hour chart. We have these green lines up here, which represent the 200 bar moving average on the 4-hour chart and the 200-day moving average. This moving average cluster comes between 0.5850 and 0.58, let's call it 70. Also in that area is a 38.2% retracement of the move down from the September high to the September low. That level comes in right at the 0.5850 level, right where the 100 bar moving average is also found. So this area right here would need to be broken on the top side, broken above, in order to switch the bias more to the downside. Absent that, and the sellers are more in control. So be aware of this level as the bias shifting area for this currency pair through that interest rate decision. Now, on the downside, or where we are right now, we're actually testing this low price going back to the month of August. That low price comes in at 0.5798, just below the 0.5800 level. And as you can see, that the price action over the last couple 4-hour bars have been holding support. We also held support against that level in trading last week after breaking below it, but we held support here, and here. So that is a key level. Obviously, we're sitting right on top of it through the rate decision. If they cut by 50 basis points or more dovish in their response, we could easily see the market rotate further to the downside off of that and through that level. But what is important for you as a trader is that if we do break below that level, it becomes a new risk-defining level for sellers looking for more downside, at least from a trading perspective. That is, if we move down, let's say through here and move down toward the low price from 2 weeks ago at 0.575153, any sort of corrective move, you would expect to see sellers leaning against this level. So be aware of that dynamic as well. And with a rotation further to the downside expected off of that. So now on the downside, I talked about the 0.57533 level. I also want to bring into focus this level right here, 0.5677 level. And if I take a broader view of this and go back in time to let's say these areas right through here, this low right here, you can see how that level was a level of significance. More so in the fact that there are a number of different swing lows that came in, bounced off of that level, bounced off of that level, bounced off of that level. Admittedly, we fell below it here, but then we bounced off of it again right here, moving to the upside. And finally, we broke above that level and stayed above that level, not to return to it since that point. So that would be another key target on the downside over time if the price can continue its rotation to the downside, get below this 0.5753 level. So big decision coming up. Bias is more to the downside. Stay below the moving averages keeps that bias more in the negative direction. Move below the 0.5798 level. Look for 0.57533, and then further selling expected after that toward perhaps 0.5677. That's my look at that currency pair going into that interest rate decision. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.